If you get 20% return on your money, you can double your money every 5 years. And actually it's less with compound and everything, but 5 years. If you start early and make deposits consistently, you'll become a millionaire. Warren Buffett became a billionaire. The trick here is to get your money working for you and you not working for your money. We put 20% of everything we earn back into the investments. Once you get to a certain amount, it will grow quickly. And remember, we are making the time decay on options our friend. We're not worried about the time decay. We want it to decay. So that's a huge advantage. And like I said, over the years, I've learned that stocks move down faster than they move up. And never buy a stock making new 52-week lows in price. It's like trying to catch a knife. It's going to cut you. I never buy a stock making new lows. I will, on the other hand, buy ETFs making new lows. And like I said, I'm looking for volatility, and ETFs are professionally managed. So they're constantly moving stocks in and out of that ETF. So that is the only thing that I would buy making new lows. Just remember, a stock going lower in price could end up going bankrupt. Just remember Kmart, GM went bankrupt. And most investors don't know, but when a company declares bankruptcy, even though they don't go out of business, the first thing the bankruptcy courts do is they wipe out the shareholders. They clean the slate. And if the company can get their finances in order and renegotiate everything, they are allowed to offer stock again. But those previous shareholders are shit out of luck. All the money that they had tied up in that company is gone. So even though GM has stock traded, it's new stock. To me, it's ridiculous. But so don't think that company's too big to go out of business. It may not go out of business, but if it goes bankrupt, your shares are gone. So that's why I like to stick with ETFs. I do buy individual stocks, but it's not a large percentage of my portfolio. And what's funny is I was talking about that $4 a share stock. I usually do not buy any stocks that are under $10 a share. And the old adage of you get what you pay for holds true. The only reason why I bought that stock is I read in a financial report on NVIDIA that NVIDIA had a large investment in that particular company, and the name of the company is called SoundHound. So that was the only reason why I bought that stock at $4 a share. No other reason. If I would have seen it or been made aware of it, If it wasn't for NVIDIA owning it or has had a vested interest in it, I would have never bought it. But it has definitely paid off, and paid off a lot. But a lot of my individual stocks have, just because it has been so volatile of a market. Again, ETFs, they are just individual stocks that are grouped together and they are managed. If one in the group goes bankrupt, it's simply replaced with another, and your ETF goes on. You can sleep at night knowing your ETF's going to be there in the morning. I've been so blessed with my financial success and my wonderful wife. I know the stock market can be scary, but it doesn't have to be. Let us help you learn how to do this. Like I said, we like to be proactive. We don't hope and pray that our stock is going to go up or ETF. We set our price, get paid to sit and wait. Remember, that's cash money up front to either sell our stock or to buy a stock at our price. To me, there's nothing better in the world than that. And remember, the trick is to get the money working for you so you don't have to work for the money. Never, and I say this with a little grain of salt, never buy your options back once you sell them, unless you can buy them back pennies on the dollar. Like currently, I was telling you about that $4 stock and the options I have sold on it. Currently, that put option that I sold for $7 a share, and if the buyer of that option exercises it, he would ask me to pay $15 a share for that stock. Anyways, I can buy those options back right now at $6 a share. Now, that would give me $1 profit. So I would have $1,000 profit if I bought them back. But I have no intentions on buying them back. Only way I buy back options is pennies on the dollar. If I could buy all those options back for 19, 20 cents a share, I would do it. But for $6 a share, I'm not going to do it. I'd rather take the stock, because to be truthful, that would give me 2,000 shares in that company, and I could write calls on it. That's even more money in my pocket. And what I like about this is it's cash. It's not paper profit. It's not wishful thinking. It's not hoping. It's cash. Cash is king. And like I said, when I sell an option, when I sell a call on my stock, I already have a price in mind what I'm willing to sell that stock for. So when I do that and it goes above that price, I take it with a grain of salt, because I'm not going to buy that option back, even though I could have made possibly a bigger profit on the stock. I'm satisfied with what I got. Don't be greedy. You set it, let it go. Don't mess with it. I've screwed myself several times by buying them buying them back, and then the market takes a flop, and I end up banging my head against the wall because I shouldn't have done it. So learn from my lesson. Do not buy them back unless you can buy them back for pennies on the dollar. Don't be greedy. Slow and steady wins the race. So that's what we're doing. And to be honest with you, since 2023, we've done better than 20% return. But like I said, that 20% is a target. If we got 15%, I'm still happy. And one of my philosophies is I really don't care how much money I'm taking in every month. I do not set an amount. All I want to do is have money coming in every month. It doesn't matter what it is. If it's $20 over, that's $20 I didn't have to work for. So as long as it's a consistent money coming in every month, I don't care how much it is, that's what we're looking for. And like I said, that 20% is just a target. If it's a little lower, a little higher, it's just something to aim for. That helps a lot in screening the ETFs or the stocks. I want 20% return on my money, and this is not a get rich quick scheme. It takes time and patience. If you want to become wealthy, be consistent with your deposits and your effort. Always live below your means and stay away from credit cards. With credit cards, all you're doing is selling your future. Remember, you can become rich making 20% every year on your money. And if you think about that, what are the credit card companies collecting? They're making 20, 30, 35% on their money. Who's getting wealthy? And I believe if you have $10,000 in the bank and you have $10,000 of debt, you're debt free. But that's just my thinking. And remember, it's extremely important to save money on a regular basis. I hope you like these videos. Please leave a comment at our website, www.coldtechinvestments.com. Tell me what you think. I hope it gave you some information you didn't have previously. Thank you.